All right, another market update. This time during regular trading hours, so I think that's the first time I'm doing that. I intended to record earlier, but there you go. So let's start off by looking at the SPY. I've reconfigured some of the zones because I had to just clear up the chart a little bit, and I thought might as well add some these circular zones. That's at least the graphic I'm using to highlight the zones of support and resistance. So where are we at the moment? This is just sort of an hour into trading. Yesterday was a total destruction. Let me go to the daily chart actually. So he came all the way, actually sorry, the day before was total destruction. Yesterday was just sideways action. We're doing more sideways action, but we're really just hovering on that ascending line. The longer we spend there, the more likely we are to flush below. I actually think it might happen today. And yeah, I mean, my thesis remains the same. I've said it, when we went up, I thought we'd go down. I sold here, I sold there. Then we identified this support. Back then I had a circular line all the way here before it even dropped. So, and even when it came up here, we thought, all right, I say we, I mean me, it would come back down. I didn't expect it to be this violent 2 days ago, but there you go. And to me now, we're just going to hover here and basically flush down, test 38850, and then straight down to here. Not in one day, but pretty quickly. Maybe on some news, it'll be the perfect catalyst. Then all the talking heads can say, it's because of the news story, but actually price action predicts a lot, so that's why I follow it. It's just a question of statistical likelihood, and that's why it helps me trade. So today we had it started down. Let's use the 15-minute chart. So we started 1 minute. We started lower. Here it is. And then we actually moved higher, actually ventured above yesterday's sort of high close point. And actually I thought this would happen here, which is actually why I made the video. Because to me, this says enough. It very quickly went back down to test the sort of low of day. Not that we've traded too much today. I think we're just gonna. Okay, I don't usually do sort of intraday 1 minute predictions, but I just feel like today we might try and recover up here, fail, and then make a new low of day, and then we're going to be looking at testing the 391 zone, the low 390s, which just coincides with the general trend that I feel like we're going to lose this ascending support, come down here, and then if we close below 38850 on the SPY, that's it for me. That's put a fork in it. And then we'll just venture down the next couple of trading days. Nasdaq, as usual, is more magnified on the way down and up. So here we're down already 1% almost. Same chart pattern, opened red, tried to go green, did, and then quickly came back down. If you're not even able to take out yesterday's high of day and then immediately come low, I think that says a lot. But even if I'm wrong and it reverses higher, whatever, we're going to lose this ascending support and then come low. That's what my prediction was. The Dow Jones, which has actually been a bit weaker, which is rare because it's usually quite defensive with utility stocks, etc. But same thing. Okay, so today it's also outperforming, but there's nothing that's going to stop it from going down if all the other markets go down. Same with the Russel. It's usually also weaker, and actually it's been outperforming for some time, which is pretty impressive. So the small caps, the smaller stocks, smaller businesses. And I think actually they might be even more fundamentally screwed because they have more debt and compared to the mega corporations. So yeah, and also they have more sort of, they're unable to avoid regulations and high interest rates as much as corporations. They could sort of offshore their stuff. So it doesn't really matter though. I think all of the indices will eventually test their low from, let's say, September the 6th and then come lower. So my predictions have not changed. Just now we're intraday, so let's see what happens for the rest of the day. Let's also look at the DAX though, because the DAX has been outperforming a little bit the US markets, but I don't think that will last, especially when we get down here. But again, they'll all come down, all go up together. In this case, I think they'll come down. Yeah, so let's just keep an eye on the DAX, because for me, it's the 12,600, 400 zone to watch. And I think once we're down there, if we get down there, the US markets will be near flush point themselves. Let's also look at the VIX. That's been interesting lately. It touches on 28, and on that day that we spiked higher, or the market spiked lower on CPI, we did actually make a slightly new high. So I still have, and I've seen other predictions now come out about, maybe we're going to get to 30 or even just above. In my case, I think we can hit 32. So that too will coincide with a market flush, whether it's the US or the European markets or all of them. So those are the general markets. I'm going to take a look at the yields very quickly. Continuation is the story there too. So I don't usually look at the 1 year bonds, but interestingly, they are touching, just kissing 4%. Whether they actually touched it or not doesn't matter. I think it did, but 4% is a big number. So once the 1 year does it, the 2 year won't be too far away, and the 2 year is more significant. It's one that a lot of market participants look at. So the 2 year, watch out when we hit 2 or get close to it. That could start some crazy black swan moves. Yeah, 5 year also. Interestingly, the 1 year isn't actually above 1%, but on the day. 5 year also above its last high when the market flashed down to that, or was it June lows? So telltale sign there. Obviously that's been passed on the 2 years some time ago. 10 year, this is the most important one, this is the one I look at every day with great focus. You can see we've almost done that here too. It's coming, it's definitely coming. 3.5% on the 10 year. Watch out when that blows out. Again, black swan events more likely. The 30 year has already done it, which is pretty impressive. You can see the 10 year is still not above 30 year, but that will come, and then the whole curve will be fully inverted sort of perfectly in a nice picture. But at the moment, the 30 year is actually above the 10 year still. I'm just waiting for that 10 year to do it, and then yields are really sort of crying out recession. And what did I read today? That the mortgage rate was above 6%, the Freddie Mac, 30-year Freddie Mac or whatever. So, and that last time that happened was 2008. So all of the signs are there for, a pop in all bubbles. At the moment, we've already had a pop in the stock market, but now we're talking about housing market too. There's always a delay. There's always a delay in everything, and all of the recession indicators. Corporate earnings are coming out soon, and there you'll also see earnings just terrible. So you got to give it some time. You got to position yourself slightly early. So that's yields, markets and yields. Let's look at the currencies, dollars, FX, dollar, nothing, absolutely nothing. Today it's just sideways action, a bit like the markets, a bit like the yields, to be honest. FX also, nothing really to look at. I only look at something if it's sort of 50.5% or more of a move. Euro stays below $1. I think you have a nice technical setup for a breakout, but then again, DXY is just so strong. When markets go down, I think markets going to go down. So that might still have some time to wait until it breaks out, but that would be a nice trade to make, sort of euro dollar FX. USD Japanese yen keeps going up. That's just been on a tear for a long time. So I also like to look at the Canadian dollar and Australian dollar, because those are commodity currencies. At least that's how they are portrayed. But at the moment, they've been losing against the dollar, for some time. So why jump into those? I mean, I prefer to hold dollars, and if I want to make a move, I'll jump into certain stocks and they'll move 5-10% in a day. So I like to hold cash, and I wanted to diversify the currencies I hold for cash, but the dollar's been the best thing, and thankfully I've stayed in that. Otherwise, you could go and venture in the Turkish lira or the ruble if you're able to get rubles. If you want more volatility in the FX, the Turkish lira is incredible. Though, look at this chart. I remember this day when it spiked all the way up and then just completely reversed on some Erdogan central bank stuff. I forgot what it was at the time. And I didn't think it would go all the way back up, but it's actually just, and obviously the market downturn has helped this, but just constantly creeping up. And if we take out this sort of 18.5-ish zone, and this is inverted, obviously, so this is the US dollar going up, Turkish lira is just being destroyed every day. Look at this weekly ridiculous chart. So I would never buy something all the way up here, but technically I'm in the dollar, so I am in it. So those people holding Turkish liras have seen massive inflation, but that's old news now. It's just constantly in the background. So yeah, just interesting one to look at. And the ruble has outperformed the dollar. It was funny, everyone sort of saying the ruble's trash, and then, ciao, the ruble just destroyed everyone. I think it was the best currency alongside the Brazilian real this year. So this, I think, will actually go higher. Ruble might depend on some battlefield news, but basically it's the #1 commodity currency. Anyway, I didn't want to go too much into currencies, but the dollar is just sideways today, and I think that the trend is just sideways up if market turmoil continues. So FX, let's look at gold and silver, and meanwhile you can see the Nasdaq making new lows here. We're going to flush this ascending support. You might even see it live. What could happen now-ish? We lose 290.5, definitely. But anyway, let's look at the gold very quickly. Oh, we just lost 1680. Amazing. I didn't see that. Okay. Silver being resilient, by the way, but we'll get to that in a second. So gold, have to adapt, but it's exactly what we thought. I don't know why I keep saying we. So 1680 was multi-month. I don't want to say multi-year. Multi-year support. Very, very resilient, very credible. 1, 2, 3, 4, 5. I would count this as a bounce zone also. But since we hit it very frequently without much time period in between, and with the markets looking like the end of the lower, I predicted this also would happen. Here we've just flushed 1680. Next support is 1670. The whole of that $10 zone is one zone for me, so we're still within the support zone. As you can see, we're reaching 1670 very quickly, but to me it was still not in flush zone until 1670 goes. Once I start seeing 1668, 67, then okay, we've lost it, especially if we closed below 1670. So gold is losing its support zone as we speak. Silver, even though it's down 2% right now, has been very strong. I've said this, especially since sort of the breakout here, it was outperforming gold. It was underperforming as usual, as you would expect on the way down, but really in the sort of, let's call it the 8th of September, I think it was 8th of September, that's when it really started to outperform, and I noticed it by the 9th or maybe even the 8th, and then we saw this crazy move, which was amazing. And then on this drop here, it was outperforming gold. Yesterday it was very green, outperforming gold. Today, okay, I'm not going to say it's outperforming, but to be honest, if gold's down 1.4%, silver should be down 3.8% or something. So I would say it's still outperforming, but like I've said, if gold and the markets go down, which I think is going to happen, which is happening, silver has to come down. It cannot defy gravity. I hope it does, but I don't mind if it doesn't, because I really want to pick some up just here, just above 18. And then if we keep going down, I mean, I've got a plan for that too. I'll probably nibble some here in the low 17s and wait for a real flush, because if we're down here, then something crazy is going on and I'm ready to buy, unless some macroeconomic grand sort of thesis is changing in the background, then I have to adapt. But I don't see that happening. For that, they'd have to raise interest rates 10% or something and be okay with the total market, global market, stagflationary depression. I don't know. So, wow, 1667, just the number I was looking for to suggest that the flush is on. Probably just rally above 1670 now. Just take out the stops. Come back up. Again, I'm looking for a close below 1670 on gold. And I would expect silver to be far lower with gold there. But let's see if we go back above 1670. Well, this is just intraday interest. I'll stay on gold here for a second. The 1 minute. There's that flush, 1672. All the stops taken out, 1667. And there we go. Yeah, above 1670. Always the same thing. All right, anyway, let's see. It's all about where we close. So that's interesting. That's great. Let's see where the GDX and GDXJ are. Let me just zoom out. Okay, so we're not even. You can see that the sector is not below its recent low, and you can see gold is right. Gold is now 1670, below 1670. So you can say the sector is outperforming the metal, which is bullish for the stocks. But then again, that's kind of irrelevant because the market is, in my opinion, going to continue to go down. So we should go all the way down here, unless gold puts in a beautiful hammer and it's a reversal. That'd be a very strong reversal signal. But anyway, the sector is outperforming. To be honest, I would also expect, especially with silver down 2.5%, gold down 1.5% at the moment, the market's down 1% by now probably. You'd expect these two down sort of more, 3% or something. But they're not outperforming and they're above their recent lows. So strength, relative strength anyway. But I still expect at least to go down to, let's say 23, whatever, low 23s for GDX. And low, let's say 2850-ish for GDXJ. But probably go all the way down and flush. But I'm probably gonna nibble, at least buy back, and I do this so many times, buy back what I sold here and here. I did double sales here and some there. I'll buy that back. And if it goes lower, great. The whole time before, when we were going down here, I had sidelines to buy when it went down. So when it goes up and I sold what I had, to buy back what I had, well, it's just returning to the scenario that I was in back here. So I planned for this situation and I actually prefer it. So no problem. Nibble here, nibble below. Let's look at the portfolio holdings now. Yes, we're going lower. 3% across the board for the miners. Makes sense. Since these are delayed though, I'd have to check my broker to see what these are. There's a 50-minute delay. On OTC, no, these two remain closed realistically. And the alternatives are getting crushed. Good. My holdings there. Okay, well there you go. I was going to do another video on cryptocurrencies and maybe one on large caps. There are some nice ones in the large caps. They're probably all getting destroyed now, which is good because some of them I like also. Peloton, for example, terrible company, don't care about it, but just a nice setup. So for a bounce, I'd probably look at that one, sort of 2, 3, 4, 5 trading day bounce. Look for a little 5 to 20% move. Now yields are probably going higher. Yeah, market's going down more and more here. You can see the Nasdaq is right at that the moment 29. Look at that. We're very close to the lows of a few days ago. Whatever, it doesn't matter. We're basically touching it now. So let's see what happens. All reason for it to go lower. Yesterday was sideways, today is sideways down. If we close below the recent low of the 6th of September. Whether it's the Nasdaq is basically there, the SPY is almost there, the Dow will be there soon, the Russell is far from it. VIX is going to go green. VIX should be green already, so something to worry about. The DAX is outperforming, it should be lower too. Anyway, let's see. Nasdaq very weak. Tech stocks will lead the way down. DXY has gone green. Yeah, so continuation of what I've said for some time. The market's going lower. Plan accordingly. I'll make a video later this evening. Good luck. Thanks for watching.